The ECB cuts rates again. Welcome to Market Insight. I'm Ramzan Karmali. So in a much anticipated move, the ECB cut rates by 25 basis points, so the deposit rate now stands at 3%. They've also left the room open for more cuts next year. So why did they make this move today? Well, to get the answer for that, we'll speak to Joachim Klement, investment strategist at Panmure Liberum. Joachim, thanks so much for joining us. So why did they decide to cut just 25 basis points? There was talk of maybe 50 even.
Well, they at least left the room open for more rate cuts in 2025. It was clear that they have to cut because inflation is coming down at the moment, and both France and Germany see their economies falter in front of their eyes. And to at least give them a little bit more room for more economic growth in 2025, they need to cut not only today, but into the early parts of 2025.
You mentioned their inflation is coming down, but is the battle against it won?
I don't think so. Our models predict core inflation, ex energy and food, to remain above 2.5% in the Eurozone throughout next year. And while Germany and the French economy are struggling at the moment, we think that they will start to accelerate again in 2025. And that, together with the high residual core inflation, presents new inflation pressures in 2025, and in our view means that the ECB will have to pause at some point next year.
Well, next week we hear from the Fed as well on their interest rate decision. Do you think we're going to enter 2025 with divergent policies?
Very likely. So the Fed is widely expected to cut another 25 basis points next week, but to pause in January because the US economy is doing much, much better than the Eurozone. And we already see today the anticipation of further rate cuts in Europe driving the euro lower versus the dollar. And I think that is going to be the theme for much of the next 6 months.
And what about a potential trade war? We know President Trump-elect is going to come in and put tariffs on lots of goods for lots of countries. How's that going to impact on the ECB?
Interestingly, the Eurozone, together with the UK, by the way, might be on a relative basis the safe havens in this trade war. Simply because at the moment everybody expects that the tariffs that the Americans put on the Europeans are somewhere in the 10 to 20% region. And that creates not a lot of inflation pressure, but it obviously reduces GDP growth. It is much, much worse for the Americans and the Chinese with 60% tariffs or more, which creates a massive inflation threat in the US and in China.
And that could have quite a big impact on the Fed and their decisions for 2025 if tariffs are as high as we are led to believe.
Absolutely. If Trump follows through with blanket tariffs of 60% or more on Chinese imports, we estimate that it would increase headline inflation in the US in the first year by 1.2 percentage points. In other words, US inflation would go towards 4% again, and that would force the Fed's hands for more rate hikes.
And with all these interest rate cuts that we're predicting for 2025, what does that mean for equity investors? Is it a good time to be a European equity investor?
I think it is in general still a good time to be an equity investor, whether this is in Europe or the US. We remain bullish for 2025. However, there are substantial risks. So what we emphasize these days are steady earners, meaning companies that are less exposed to any kind of trade war risks or geopolitical risks in the Middle East.
But Joachim, what about companies that are exposed more to tariffs? Don't you think they'll suffer in Europe?
In theory, yes. And when you're exposed to Chinese demand and the Chinese economy, that is probably true. When it comes to companies selling into the US, we also have to be aware that higher tariffs in the US and higher inflation mean a stronger dollar. And we think that companies with a large revenue share in the US will benefit more simply because in higher dollars, exporting into dollars means higher translation gains and an outperformance versus domestically oriented European companies.
Interesting stuff as always. Joachim Klement from Panmure Liberum. Many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.